Hello guys, I hope you're doing well. This is Alex from ATFX in London. Let's take a look at what happened with the crypto markets. We provided you guys with an update yesterday and it was quite popular, so I want to check out and see what happened with the markets since then. This is Bitcoin, and you can see here that Bitcoin is pretty much where we left it yesterday. We did have a very nice close, and by close I mean the close of the day. All of these are candlestick charts, and every midnight GMT we're in a new day, a new trading day, and that's where we get these candles. Now what is important here for these markets is that when we have a breakout, that the market sort of closes around its highest level for the day. That would tell us that people bought and they were happy to remain long. Okay, that's important. If the market would have just gone up and then pulled back significantly, they would have told us that people are not ready to hold on to this for longer, and we could potentially have a full retracement. Now for Bitcoin going forward here, the best trading scenario or best entry was at 4,200 because if you look at the daily here, we're dealing with that triangle, okay? And we are relatively close to the take profit level at 5,252. So I will book profits up here. I wouldn't look to go long up here. And I do think if people want to get involved, they're probably going to wait for a pullback, maybe a 50% move of this move we've seen here. So maybe around 4,600, I think traders might look to be interested to get involved again. But there are other markets that are far more interesting, I think, to get involved with. And I'm talking about Ethereum and Ripple, which we discussed yesterday. What's happening here is that you have a nice ascending triangle in Ripple, and we had that break today, actually. And I would say that as long as we don't trade below 151, so as long as we don't go deeply back into the pattern, I will see this as a successful breakout, and potentially we can go all the way up to 263. I derived that target not by looking at the dollar amount of this pattern, but looking at the percentage amount, which I think makes sense for something like cryptos that move so quickly up and so quickly down. And then we have Ripple, which by itself, this whole section here is not necessarily a solid pattern to trade with, but we can sort of view this little section here as some sort of a rectangle. And we had the break to the upside, we even had the test of the breakout, and you know, as long as we don't trade deeply back into the pattern, I'm going to remain bullish. For now, 31.63 is that trend defining level, and we did have, as you can see, a push to the upside and then a pullback to the breakout point. When we move back to the breakout point, people wanted to buy, and I do think that if we go back to these levels, that people will be quite keen to buy. And then hopefully we don't do that though, we just go up now, and if we, after going up and taking out that high, we can probably reduce the trend defining level from 31.63 to maybe something like 33.08, and then potentially just at 34. So that is what I'm looking at there. So the pattern of the quality of this is not as good as all the other markets, but we have a bit of a rectangle here, and if I'm right and we see further gains, for example like the additional 20% gain we just seen in Bitcoin Cash, then that would not surprise me if something like Ripple continues to move to the upside. Now before we finish, it's actually quite interesting. I saw this tweet by an anchor at Bloomberg, and she was like, oh, it would be nice to have some sort of news behind these markets, behind this search, and not just an explanation of the technicals. Well, the thing is this: fundamentals don't necessarily drive this market. Of course, the buy and holders, or the holders, so the buy and hold investors, they're buying these coins because they think that is the way of the future. We're gonna use this, so they're buying today because maybe in 5-10 years this is gonna be something that we can use. Of course we can already use this, but if you look at the activity, for example in Ethereum apps, how much money is spent, how many people are actually using those apps? Well, there's not a lot of people using those apps. So again, forget about the fundamentals. People are not necessarily using these products right now. Regulatory things is of course important, but as for a move to the upside like this one, it's actually not that important. It's technical analysis that matters, and not so much about the macro fundamentals. We can also just relate this to how currency markets were, and even stock market investing maybe 15-20 years ago. Back then, you know, you didn't have numbers coming out several times per week as we're having now, so we had a constant check of what's going on in the economy. So back in the old days, when you have people like George Soros trading, they obviously did their long-term fundamental analysis, But many times I would say that they would probably just look at prices, because if they would wait for that GDP report that was going to publish a quarter later, then they can't wait 3 months to take a decision. They would need to take a decision now with that little piece of information they had available. So the whole idea that we need to have an explanation, a macro fundamental rationale behind every move, I personally think that is nonsense. And truly for something like cryptos, where again, it's just about speculation, people making a guess about what's going to happen in the future, much like they were doing in currencies and stock markets 20, 30 years ago, before you had like proper systems and economic indicators about the health of the US economy on a weekly basis. Okay, this concludes today's market update. Thank you so much for watching, and don't forget to subscribe to our videos here on YouTube. Thank you.